these webinars pretty much for the last couple months, and it's really unfortunate, with the whole virus and everything that's happened. As many of you guys know, we do like over 100 retirement planning seminars all across South Florida, and obviously the virus pretty much destroyed that entire event for us. So we pretty much cannot be doing our normal dinner classes how we've been doing them, for the last few years. But we actually did decide a few months back that we're going to be doing these webinars on just different topics. And we pretty much started this pretty about 3-4 months ago, pretty much back in March. And we've been doing classes on different events, as many of you guys have already watched. We've been doing these events on topics like taxes and how to reduce your taxes, your overall tax impact. We brought on experts on tax minimization. We brought on experts on Social Security, on how to get the most amount of money out of Social Security when you go and retire. We've spoken about the whole CARES Act and how to get more money out of your retirement account. So, these events have been really, really fun. I've really enjoyed all of your questions on everything that has to do with money. But today is a really, really, really special day. This is probably one of the most highly respected individuals that we've probably brought on to this webinar. It's kind of like a question that a lot of you guys have been asking us for many, many years. And we've been doing these events on different topics, on things like, retirement accounts, investment strategy, portfolio management, estate planning. We brought on our attorneys to talk about how to protect your assets against lawsuits. So we brought on a bunch of people, but, a lot of you guys have been asking us for many, many years, like, when are you guys going to talk about the topic of cars? And pretty much our answer has always been, cars have nothing to do with investing. It has nothing to do with wealth management. But, after giving it a lot of thought, it actually has a lot to do with it, right? The average individual is probably going to buy anywhere between 10 and 20 cars over their entire life. And if you go about buying the car in the incorrect way, you're going to end up throwing away a lot of money over time. And the more expensive the vehicle gets, the more money you're going to end up throwing away. So we actually decided to bring in PJ. His name is PJ Guerra. He's from Exotic Car Hacks. He's actually here with us, so you can't see him yet, but I'm going to bring him on in a second. So we decided to bring him on because we've realized that a lot of our client base, a lot of our clients just want to learn how to make better decisions when it comes to the topic about cars. So we're actually streaming right now live on Facebook and on YouTube. And we decided to bring PJ to the class because, again, cars is a very big financial decision that we're all going to be making every few years, every 3, 4, 5 years. And every time we go and do a purchase of a vehicle, if you're doing it the incorrect way, you're going to end up throwing away a lot of money over the next 10, 20, 30, 40 years. And so the question that we've always been getting, and the question that I get every time I meet with a family or a client, you guys are always asking me, Sebastian, is it better to lease a car? Is it better to buy a car cash? Is it better to finance it? Is it better to get a brand new car, a used car? And these are questions that a lot of you have been asking, and you guys want to know the real answer on the best decision. So just to give you guys a little bit of background on who PJ is. PJ is a pretty big deal. He actually comes off a little bit humble usually, most of the times. If you see him on YouTube, he's probably not as humble, but it's okay. But he's a really humble guy. He's actually accomplished so much, and he doesn't really boast about it. But I actually did a little bit of research on him, and if it's okay, I know PJ, you're listening. I'm gonna boast about you a little bit. But he is the CEO and chairman of a company called VIP Motoring. So it's pretty much the world's first alternative investment that invests in exotic vehicles. So he has actually an entire fund that individual investors can invest money into buying exotic vehicles, literally like if it was an investment, right? He manages over $2 billion with over $170 million in revenue. He's a best-selling author he wrote a book called Third Circle Theory. And more importantly, which is what we're talking about today, is he actually was the creator of the company Exotic Car Hacks. It's a company that pretty much teaches individuals on how to buy cars and how to not lose money on the car. And not only that, but how to eventually even make money when you're buying a car. Because usually all salespeople always end up telling you that, buying a car, you're always going to lose money. So just accept it, right? But, he pretty much has proven the point that that's not necessarily true. And so we decided to bring him on so that he can give you guys as much information. We're going to have him about an hour here, and we're going to be talking on everything that has to do with vehicles, whether leasing, paying cash, financing. And I'm just really excited to have PJ here with us today. And it's going to be a really, really fun event. Now, for those of you that don't know who we are, who Guerra Financial Group is, we are a full financial planning firm. If you are interested in having a meeting with one of our advisors and talking with us about your specific investment or your retirement or anything along those lines, you can gladly shoot us a text message. You can text the number to the number 484848, and you can just text the letters GFG. And somebody from our team will actually contact you tomorrow to have a meeting with one of our advisors. So I know that some of you are on that are existing clients, those of you that are not clients, and you guys have been interested in having a meeting with possibly one of our advisors. You can gladly just text the letters, text the number 484848, and just text the letters GFG. So with that being said, I'm just really, really excited to have PJ here with us. We're going to have about an hour with us. You guys can also ask any questions. Those of you that are watching us on Facebook, if you're watching us on YouTube, just go ahead and ask those questions on the comment box, and we will be getting to your questions and answers that PJ is going to be giving us afterwards. We're going to be repeating the event again at 7:30, but we're going to be doing it in Spanish. Unfortunately, PJ does not speak Spanish, but that's all right. So with that said, let's go ahead and bring PJ on board, and I think this is going to be a really fun event. So thank you, PJ, for being here with us. I know I talk a lot, and by the way, those of you guys that are clients of ours, you guys already know that I talk a lot. So PJ, man, I appreciate you being here with us, and I really appreciate this hour that you're giving us, because I know that you didn't have to do this. I know you're in a position where you don't even need to be working anymore. But honestly, I know that you love educating the community on the topic of cars and the topic of investments. And so I just thought about, there's no one better to bring on than you, PJ. So appreciate you being here with us, man.
Well, thanks for having me on, and whatever insight I can provide you and your community, I'm more than happy to. So I'm an open book. You're welcome to ask me anything you want.
Awesome, PJ. So I'm going to get right into it, PJ, because I know that this is kind of where everything kind of begins. Is, people are always asking about. Well, actually, let me go back a little bit. So let me just get a little bit more background on you, PJ, so that everybody knows. So how many cars right now do you currently own? Let's start off with that.
Personally, I have 11 cars.
Okay, so you have 11 cars right now.
Under my business investment firm, we have 47.
47 cars. Okay, good.
Now, every car under our business is over $1 million. And in my personal collection, roughly every car is over $200,000 and under 1.5 million. So it's in that range.
Got it. So pretty much you have sounds like you probably have anywhere between $3 and $4 million in vehicles personally.
Personally, a little bit more, because most of the cars under 500-600K. So a little bit under like $5 million.
Wow. Okay. So guys, you guys are dealing with a person that knows about cars. Okay. So some of you that are probably thinking, what does this guy know about cars? He knows a little bit about cars. And so I just want to give you guys a little bit of background on him. So I'm going to start off with just some basics, because I know really we want to talk about your pretty much the coursework that you created that had to do with, what's the most efficient ways of buying vehicles. And I just want to start off with the basic concept, because again, we're just talking to a normal community of hardworking people that have saved money, that have saved diligently. And it's a question that everybody has is, whether buying a new car or a used car is better. And can you just kind of explain what your thought is on that and why it is that way?
Sure. So let me pretext the entire, kind of evening of conversation just saying that one of the key ways you're going to kind of understand how to make better financial decisions around cars is to categorize yourself into one of two basic key factors. Either you're a consumer into the car market, or you're someone who leverages the car market. So it's basically you're either a money person and you leverage money, or you're a consumer where you consume the goods you're purchasing, right? So the majority of humans basically purchase a car for consumption. They either lease or buy a car, new or used, based on their pretext or understanding of cars. And as a result, become consumers, therefore consuming their money and into the depreciation of the car. And if you learn to leverage cars over time, you're going to start understanding that cars are just a vehicle of money in itself, no pun intended. And they're basically a concept where you can park money if you choose the right cars. Now, you asked me used or new. The idea of a new car in the past has always been looked at as it was a car without issues, a car with a full warranty, a car that basically was never touched by someone else, abused or broken down by someone else. And we've all heard the thousands of horror stories of buying used cars that are abused, broken, previous accidents, have been in floods, and so on and so forth. And so I think there's a lot of people that basically fit into the extremes. It's either like, if I buy a used car, it must have had something wrong with it, that's why it's used. And if I buy a new car, I'm doing it because I don't want anyone else to have touched it, and I don't want to risk anything. So let me just give you some background about the auto industry. That was what made sense 10, 15 years ago. Today, there's so much production of vehicles that it makes it near impossible to actually only be a consumer of new cars if you're playing in the luxury or exotic car segment. Well, when I say it's impossible, meaning to make financial sense of it anyways. But so personally, I would never, ever, ever buy a new car, no matter what. The only time I ever touch brand new cars is very limited production vehicles that basically come out with no chance for a normal citizen to get one unless you have ties to basically either the Lamborghini family, or you understand where, you have ties to the right dealers and the right connections to get one without paying a markup. And whenever the values are predicted to go higher than what new is for used, those cars are purchased new. Now, that basically summarizes about 0.01% of the entire car market. So that means that I would never buy a car that I intend to drive as a new car. And there's one basic rule, is because new cars, no matter what they are, unless they are that 0.01% of cars I spoke about, will depreciate simply based on this factor of something called time, meaning new cars come out each year, newer versions of the same cars come out with a newer model years. And so there's always surplus of inventory usually. That creates a huge decline in the actual cost of the car, even brand new. So the simplest terms is you buy a car for $100,000 new. The same car appears next year for $100,000 as a 2021 model. Now the 2020 model left on the lot, the dealer discounts $30,000 to move leftover units. That means that your car, even if it has 100 miles on it, that's been sitting in your garage, just lost $30,000 because the dealer discounted an old leftover unit $30,000. So I would never put my money in the hands of a car dealer. And so that's why I would never buy a new car.
So basic idea. If you're talking to a normal community, right? Not that 0.01% of individuals like yourself that buy these very, very, very exotic cars that are really hard to get. We're talking about, people that want to drive a $50,000 or a $75,000 car, or they want to have a Range Rover, or they just want to have an X5,
a Mercedes, a BMW, a Rover, some of the cars that most of us kind of look at as a luxury.
As a luxury car, but not an exotic, right? So those cars, never touch them brand new, because within the first 3 years, you're going to take a hit of what?
I mean, I wouldn't even touch them brand new if they were the limited versions of those cars. Meaning, if you had like a one-of-a-kind Range Rover that was purple with white interior and it was the hottest thing on the road and there was only one of three in the world, I still wouldn't buy that brand new, because that's still going to depreciate too. So the way I look at it is, in the first 3 years, the majority of luxury cars lose anywhere from 40 to 50% of their value. And that is basically a supply and demand equation, because what happens is leases, right? We all know leases are how we've been trained by the auto industry to think is the wisest and best way to purchase a car, which is basically a robbery. In a way, they've convinced us that robbing our money is the best and wisest thing to do. So one of the things that occurs is every year, your leases on luxury cars are basically 12, 24, 36. And whenever these leases come up, there's always a surplus of vehicles being traded into dealerships. And on the sheer volume alone, These cars then get traded at auctions between dealers that basically allocate these cars because they have nothing. A dealer may not want to carry 14 silver Range Rovers that they sold last year in a year from now when the leases are up. So they'll sell them to other Range Rover dealers. And these cars will cross auctions and have a cost. So whenever that cost is usually bought dealer to dealer, it's usually lower, once again, lowering the value of the car once more. So we have what we call a very accelerated depreciation schedule on luxury cars, which is what we call front heavy. So usually the first 24 and 36 months are the most brutal hits of depreciation that a car will encounter.
Got it. So in basic, so this is the reason why you're saying that the first 36 months, anybody who buys a $60,000 car, call it like a brand new $60,000 car, within 36 months, they're going to be down from a $60,000 car to anywhere between about a $40,000 car to maybe, 25,000, somewhere around that range.
Yeah, now, actually closer to 30 for the sake of discussion.
Yeah. So let me ask you this. So if within the first 3 years, the individual that buys the new car is going to lose 30% of its value, or 50% of its value for sake of conversation. Let me ask you this. Within the following 3 years, in other words, year 4 through 6, how much is a normal depreciation schedule if the car is driven at the same rate that it was driven throughout the first 3 years?
So the problem is that the first 3 years, the depreciation schedule isn't as heavy on miles and condition because most cars are newer as it is in the following 3 years. So there are some factors that cause depreciation to increase faster up front. Time is one of them. A car is new, a model is new. 3-4 years later, a new model is in the horizon. People are talking about a redesign or something, or some upgrades to the same trim level, right? So that's that. Most of these cars run out of warranties after the 4th year, right? So that's yet another drop that occurs. And most cars start showing wear in condition and excessive mileage after year 4. So what happens is that you could have 100 miles on your car and never drive your car year 1 to 3, and you would still hit a significant level of depreciation, regardless that you drive your car or not. However, year 4 to 5 and 6, that depreciation then gets changed strictly based on your driving, like the amount of driving you do, and also the condition in which you keep the car. And of course, then how or where that car is placed in the spectrum of the next model coming out. Meaning, is it 1 year before the future of the next Mercedes S-Class gets introduced and it's significantly better? So there will once again be a huge surplus of cars in the market. But what happens after year 3, which is where the consumer kind of becomes the investor, the money leverage, is that time no longer becomes a factor in the depreciation. And condition and mileage do. And what's interesting about condition and mileage is that it's in the hands of the person who's driving. Meaning you can choose how you treat your car. You can choose how many times you clean it or how well you keep it. And you can also choose how many miles you drive it. But you can't fight time, meaning the first 3 years that you like it or not, you're going to lose money. So it's almost like saying like that money's gone regardless that you like it or not. But by the 3rd and 4th and 5th, it's basically on miles and condition. If you want to see how this strategy works out, then basically look at the big con that leasing a car is. Because leasing a car basically tells you we have 12, 24, 36 months leases. Why? Because the dealer wants you to basically pre-buy the time depreciation on a car. So they're basically selling you the worst ownership period of a car, not the best. People are like, oh, it's just the best time to own a car is when it's brand new. I'm like, no, they're sending you the worst money leverage. They're basically saying, we as a dealer don't want to assume the next 3 years of depreciation. You will carry that depreciation only and pay for that divided by months. And at a time when the car no longer depreciates based on time, we will take it back. And basically we will then sell it because we can make money on it at that point, even more so than we do now.
So PJ, I know that everybody that's watching this right now, I know some of you are getting this. And PJ, obviously, he speaks at a really, really, really high level since obviously he's been doing this for a very long time. But just so you guys can get a basic idea of it, I just want you guys, I'm going to draw out really quick, like just a quick little graph of what PJ is really just trying to explain, because it's something, by the way, those of you that don't know this, but I actually hired personally PJ last year to help me buy my car. So those of you that are interested in just making sure that you're making the right purchase decision with your car, you can go ahead and contact his firm. But the basic idea about the way a vehicle works, right? That he was explaining is if you buy a car, right, at point zero, in other words, today, right, in the first 3 years of the car is going to lose approximately 50% of its value, right? So let's just say that you went and bought yourself a brand new, call it $60,000 BMW, brand new, a 2020 brand new BMW, you're looking at $60,000. Now, what PJ was just bringing up is the fact that in the first 3 years, that car is more than likely going to take about a 50% hit within the first 3 years. So that means by year 3, in other words, today we're in 2020. By the time we hit 2023, we're probably going to end up, the value of the vehicle is probably only going to be about $30,000. So technically, you just threw away $30,000 of your wealth, right? Because it's how PJ mentioned earlier. When you're parking your money in a vehicle, you're technically putting money inside an asset, right? Which is a vehicle, right? It's a lot of people don't look at it as an asset, but it is. It's something that you own. It's something that you can turn into cash. But the reality is that that car is losing value. So the goal is, how do we buy vehicles in such a way that we lose the least amount in value? And how PJ just explained that over the first 3 years, you're going to lose anywhere between 40 to 60%. But you see what's going to happen is over the following 3 years, from year 4 to 6, you're probably still going to lose value, obviously, on the vehicle, depending on the mileage of the vehicle. But I think I'm pretty safe to say, PJ, that the depreciation rate is going to be drastically lower.
A very aggressive depreciation rate for after that is 8% a year. That's meaning, like, assuming you don't know what you're doing, right? You're still losing 8% a year. That's still consumerism.
You're telling me that between year 4, 5, and 6, the car is going to depreciate at about an average of 8%, and that would be aggressive, right?
Meaning that's a bad bet, but it's still, assuming you don't know what you're buying and you just go buy a used car in that rate, right? And you don't get killed on the buy, meaning they don't charge you 45 grand for a 30K car. Right. And you know that, then basically 3 years later, assuming you still are not educated on this process, you're going to lose 24% versus, double in the first 3 years.
Right. So exactly. You see that, guys? So the first 3 years, the depreciation schedule is massively higher, right? That doesn't mean that years 3 through 6 or years 3 through 9 or whatever, you're not going to lose money. But the idea is, how do we control our money? So I've always been a big believer, and this is kind of what you pretty much taught me, PJ, is let's say that you wanted to buy yourself a $60,000 BMW. Well, why don't you instead just go for a higher model car, right? Why don't we just instead jump to a $100,000 car, right? And then what you do is you buy that $100,000 car after it's already depreciated that 40 to 60%. So take that 40 to 50%. So technically, you're buying that same $100,000 car now for 60. It's still going to continue to depreciate, but the speed is going to be a lot less, and you're probably driving a much better car or better quality car. But now this brings me to the next topic, PJ, and it's the thing about, okay, but yeah, which is kind of what you brought up earlier, PJ, which is, okay, great. I'm buying a used car. Yes, I understand that I'm saving a bunch of money because the depreciation schedule is a lot slower. But now, how do you argue this whole thing about, maintenance? And what if the car breaks down? And what if I have to change the gearbox? Or what if I have to do all this stuff? So how do you argue that? Because if it's under warranty, it's all covered. But now you're buying a used car, or you're buying a car that's already outside of the mileage. Now you don't have that warranty. So what would you say to that?
So there's a couple of elements that go into what most people don't pay attention to. So the first one is that most cars are under warranty 4 years, right? Not 3. So by the third, you still know specifically that you have a year left of warranty. So there's one thing, just let's assume there's not even certified warranties, extended warranties from the dealership or anything. Let's just assume the car is under its factory.
One second, PJ. By the way, what's your opinion about that? Is those extended warranties? Would you ever?
No, they're all garbage completely. So I'll share that with you. But let's assume you only have that 1 year left. Well, you have basically 1 year to experience the car and realize if it's a good car, bad car, has issues or not. But there are hundreds of ways you can avoid bad cars. So first off, let's talk about, like you said, you lose gearbox, maintenance, this, that. We are trained to think that maintenance has to occur at a dealership. That is one of the biggest kind of lies we've been told. That's not true. It doesn't void your warranty to do it elsewhere. It actually will cost you probably 30% of what it costs at a dealership to do it at a shop that's 10 times more qualified than the dealer to do it. So that's step one. So that's for maintenance, you know? So when they tell you you have an oil service that's $1,400 for your BMW, basically you can get that same oil service for like $299 at a qualified shop that's much better to do it than the dealer himself. The second piece here to pay attention to is that cars are not what they used to be 10, 15 years ago. So 10, 15 years ago, your cousin may have bought a BMW or Ferrari or something, and it was in the shop every 3 weeks, and someone was saying, oh, you know how much it costs to repair that thing? It's like $5,000 for this, $6,000 for that. Today, Volkswagen basically owns Bugatti, Porsche, and 100 other like named manufacturers that, including Lamborghini and some of these other brands, right? So a lot of people don't realize that there is something called globalization of parts. Basically, my $500,000 Rolls Royce has all the same parts as a BMW 7 Series on the inside. So when the shocks go bad, they're the same as the BMW. When the ECU goes bad, it's the same as the BMW. And while on the outside it looks like a Rolls Royce, on the inside it's a BMW. So there's two things that are awesome about that. The first one is it's definitely not as expensive to fix when you fix a BMW versus a Rolls Royce, unless you go into Rolls Royce, right? Like and tell them you want a Rolls Royce part, right? So basically all the parts are cross-pollinated, right? And that makes a big difference. The other part there is that in the past, Lamborghinis were, for example, handmade cars, which meant that there was like 1, 2, maybe 5, you know, across each state at the most. And these cars, they barely had any drive time. People didn't drive them. They were scared to drive them. They drove them once in a while. Today, in 1 month, Lamborghini produces more cars than it did probably in the last 3 years put together, you know, based on how many new models, how many more demand. And all the interior of the cars, like meaning the mechanical parts, are all Audi based. So why is that good? Well, because Audi basically makes a suspension shock that they use in 20,000 cars a month. And they say, well, that's how reliable that shock is now. And that's the same shock that's in your Lamborghini. So it's no longer a once in a while part that's not tested. It's now the same crap they put in every other car that doesn't break down. So what ends up occurring is you basically have a lot less repairs. Like I can count on one hand how many times I've even had to go in for a warranty item on my last 10 Lamborghinis, which means my last 3 $500,000 Lamborghinis, which I drive almost every day, I don't care. They've never broken. Like one of them had a door handle that went bad, you know, and even if the door handle wasn't on the warranty, it would have been like $1,500. But that's on a $500,000 car. That's not on a $50K car, right? Like usually, if you do your due diligence at the time of purchase, don't trust the dealer, go through what I call a pre-purchase inspection. Even if your car is under warranty, basically get a third-party mechanic to look at the car first, tell you if there's any imminent threats, meaning is there anything leaking at the time under all of that plastic at the bottom of the car that's hiding everything that could be leaking? Is there anything that looks like are the tires worn down on the inside, not on the outside? You know, is there anything that looks like it's been crashed or hit before? These are things that you can spot in an instant if you look at a car. Now, you may not, but a mechanic can. Right. And the other thing that I will tell you is I buy for my business probably anywhere from 10 to 15 cars a month, right? Meaning that they just constantly flow. That's in one business. And I also own a motorcycle shop that basically runs another maybe 8 to 15 different exotics a month. And then another dealership that basically runs another 40 cars a month. So I'm buying a lot of cars. And I can tell you that if you go through this PPI place, meaning like you get a private purchase inspection on a car, 9 out of 10 times you will get in front of most of the things that will tell you, is this a bad car or was this a normal car? Like so, that helps you determine the future if you know the past.
So PJ, do you mind if I kind of share my story of what I went through?
Please. Go ahead, yeah.
So, all right, guys. So some of you already know this, especially those of you that are clients of ours, but I'll kind of tell you what happened to me about a year ago. So a year ago when I was actually ready to change my car and I was like getting tired of my vehicle, I was ready. And I was obviously studying this whole topic about the most efficient ways of buying vehicles. And that's kind of where I ran into PJ and, you know, I pretty much contacted him, contacted his company. And that's where I pretty much started realizing that obviously that leasing a car, even if all these business owners end up saying, oh, but you can tax deduct it. That's an entire separate conversation that I think we can have. But I started realizing, that leasing is probably not the most efficient way, that buying a brand new car is probably not the most efficient purchase. But in the whole cycle, a lot of people think, oh, the only way to buy a car is if you went and drove and you saw the car. Well, my personal vehicle that I drive today, that's parked outside right now, is I actually bought it in Arizona. I think it was, PJ, right? I think we got it in Arizona or something like that. And so that car that I bought, a lot of people would say, Sebastian, how can you have bought such an expensive car in another state without even seeing the car? So kind of the process that PJ, taught in this entire cycle that I was going through was, hey, first have your guy, that's the sales guy that's selling you the car, have him do a whole FaceTime of the car, a whole walkthrough of the car, negotiate the price of the car, finish that whole cycle off. Then once you're done with all of that, then you go and hire a PPI. So I know that PJ kind of brushed it over, but it's what's called a pre-purchase inspection or a private purchase inspection. And what that does is you're hiring an individual that will go out and inspect your car for you. So that way they can tell you if the car is actually a good car. But because the reality is you're watching this right now, you probably don't know but on the outside of a car if a car is actually good. So you actually go and hire an individual that will go and inspect your vehicle. Is that going to cost you money? Yeah, it's going to cost you money. I don't even know how much I paid, PJ.
Well, and to add to that, that individual is an expert in that type of vehicle. So it's not just like a mechanic that's going to go look at a Ferrari. It's a Ferrari mechanic that's basically going to tear down this car in a way to kind of tell you, like, based on the hundreds of Ferraris I've worked on, this basically tells me this is a ticking time bomb. This is really good. Listen, it's got a little dash issue that's going to get worse. Here's the things you got to know. Right. And it costs anywhere from $300 to $700. And it basically gives you the peace of mind of knowing that you're buying a $300K car for $100K with only like a couple of thousand miles on it, which is literally brand new. Right. And for that extra, literally 0.01% of the transaction dollar, you're now able to know for a fact that someone that's even more qualified than yourself, because even if you yourself had access to the car, I mean, you're not a paint professional. You're not going to be able to tell if the car was previously painted. You're not going to be able to know what to look for because you haven't owned 14 different Rolls Royces or Ferraris before to know what goes wrong with that specific model. And if you're me, for example, you might have owned a dozen Lamborghinis, so you know Lamborghinis really well. But even if I was buying a car I had never bought, maybe I just don't buy Jaguars and I don't know them very well. Well, I don't have the extensive knowledge to know that specific model, what goes wrong. So I would hire someone who's an expert in that specific model, send them over to look at it and give me some real honest feedback with photos and everything else of what he's talking about. Right. And that helps me get peace of mind.
And that's exactly, guys, what I did, right? So the exact process that I went through is, okay, now the next question, PJ, is, okay, where do you go and find this PPI person, right? This person that's going to go and inspect your car. And if you're going, like in my case, my car was in Arizona. I don't even know what town it was, but I had to find an individual that actually worked on my type of vehicle, that worked at a dealership, called the service department put me in contact with an individual there that actually does PPIs. And they went out, looked at the car, inspected the car, gave me like a 50-point inspection on the entire car. And they told me what was right and what was wrong. So I think for those of you that are kind of worried about this whole thing of like, okay, used cars, I don't know who owns it. Well, that's why you go and get a PPI done. And even if something does go wrong on the car, right? Like let's say the gearbox gets shot and you have to spend $3,000 or $4,000 on a very, very major expense on the vehicle. Well, at the end of the day, you already saved yourself a 50% depreciation. So even if your car was $60,000 and now you're buying it at 30, right? Because it already lost 50% of its value. And now something goes bad and you got to spend $3,000 on fixing the transmission or something like that. It doesn't even matter because you already saved yourself 50% of the value on the car because you bought it used.
Look, you got to shift your mind from being a consumer and thinking, okay, a car costs me $500 a month. My insurance is this, my thing is that. And basically for $1,000 a month, I drive a BMW. And you got to really look at this as an investment where you start looking at it as, what is my net cost of ownership? If I buy a car for 100,000 and I spend 5,000 fixing it and I sell the car for 105, then technically I lost nothing, meaning it's a free car. Now, if I only bought it for 100 and sold it for 100, well, I lost the 5K repair. Now, if you divide 5K into 12 months, you might suddenly realize, wait a minute, I drove a Lamborghini for $300 a month. And you might be like, wait, that doesn't make any sense because I can even rent one for a day for $300. Right. And for an entire year, basically, I had unlimited usage of my Lamborghini. and I did that for less than, the cost of a Volkswagen Jetta lease. And
Yeah.
that's the way, if you're not a consumer, the net cost of money is what you dictate your success rate by, not the fact that your monthly payment was affordable or not, or exciting or not, because they offered you a trim level higher at a lower monthly payment.
Yeah.
And you look at the end and you go, oh man, I spent $38,000 on my lease and I got, let's say, a 20% write-off off of it, and I'm still somehow losing $27,000.
Absolutely.
And that net cost is where there's a huge issue with the mentality people take when they look at cars. And that's why most people say cars are depreciating assets, and they're dangerous cars, and they're liabilities, you lose all your money. It's just a bad game. You have to shift your mindset into no longer looking at your monthly obligation, but rather understanding your true cost of ownership of something in any type of luxury goods you're playing.
And guys, when PJ says the true cost of ownership, what he means is, what did you buy the car for, right? What was the original purchase price? And usually, what is the ending sale price, right? So, and obviously you can add in interest and stuff like that in the middle, but if you purchased a vehicle for, call it 60,000, you drove it for 2 years and you sold it for 50,000, then you drove it for 2 years for $10,000, right? That's really what it lost in value. That means technically you only paid $5,000 to drive that car for each year. So that's the equivalency of only paying $400 a month. But then you go to the dealership and then they tell you, oh, this $60,000 BMW is going to cost you $900 a month. You actually do the math and you're going to throw away 3 times more money, 2 to 3 times more money by leasing the vehicle than just by getting it used, simply because of the numbers, right, guys? So, all right, PJ, awesome, man. Thank you. I appreciate it. So, all right, so that's okay. So we spoke over used and new, and I think we kind of covered the topic about leasing. I think we all understand that, not only that, but when I had a lease in the past, and I contacted you years before, and I had told you, I'm like, hey, look, I want to get out of this. And it was kind of like, I was kind of stuck in it in a way. And yes, there's these companies that you can actually, why don't you tell us what options, if I'm in a lease and I'm 2 years in, or I'm a year in and I still got a year or 2 years left. And now I understand this concept of, I want to get out of it, right? I want to get out of my lease so I can, because now I understand that I'm going to lose money if I stay in a lease. What options do I have? Do I just like write it out and just wait until my lease, or what are the other?
So it depends. It depends how far off you are in your lease. And one of the number one things I recommend for people that are stuck in a lease is, again, understand the true cost of money on your lease, the same way you understand the true cost of money on a car. Like, what does that mean? Most people don't understand what is the buyout cost of my lease. Like, they can call their the lease agency, let's say it's Volkswagen Financial, Ferrari Financial, or whatever it is, and say, if I wanted to get out of my car today, what would be my payoff? Now, that payoff usually means if you want to sell that car today or get rid of it, you owe that lease company, for example, let's say $60,000 for that BMW that you bought for like $75,000. You've made a year or two of payments and you're trying to get out, and they tell you, if you give us 60, you can get out. So then what you do is you take your car somewhere like CarMax or anywhere else, and you find out how much is it worth. So let's say CarMax then says, well, $48,000 is what we'll give you on that car. Suddenly you go, oh my God, I'm upside down $12,000. Now that's your true cost of exit, right? So you understand that the difference between the cost of your exit and the cost of your payoff is $12,000. That's why most people are upside down on a loan when they're getting a loan for the first 4 years of that payment. And the lease is even worse because you pay less into, again, the principal and more into that heavy depreciation interest, right? So when you're looking at that number, the next phase is to ask yourself, if I sold it privately, how much closer to that 60K number do I get? From 48, can I get 53? How can you do that? You can look on companies like autotrader.com, cars.com, see what are people asking for similar cars with similar mileage, similar make and models, and then subtract 10%, which is usually the max negotiation a car has on the market. So you look at that and suddenly you go, okay, I could sell it for 53,000. Now I've closed that gap to 7,000. Then what you can do is you can go on a program called Swap a Lease, for example. That Swap a Lease is a program where basically you have this website where you can post your lease, how many months you have left, what your payment is, and then you can provide an incentive for someone else to take that lease from you. Now, why is that leverageable? Well, simply because some people love to have leases, not for full 36 or 48 months or 24 months, but they like buying out other people's leases because they get a car for a short period of time. And usually the owner will provide an incentive. If they know they're upside down 7,000, like we talked about, they may say, you know what, I'll throw in $2,000 cash if someone takes over my lease. Either that will lower their payments to even less, or that'll just basically give them some cash in their pocket while they assume my lease for the rest of the 12 months left, right? Once you do that, there's a process your lease company has. Basically, it's called a lease takeover. Someone will have to qualify with them credit-wise and will basically take over your lease. And then it's like selling your car. They carry on your terms. Some lease companies will not allow that. That's why it's important to understand by calling your lease company what your options of exit are. You know, meaning like, what can you do to exit? Do you have to sell the car? Do you have to trade it in? Are you forced to give it back? You know, is there an interest in giving it back? And so on and so forth. If you have a very special car, you might even want to reach out to the dealer who went ahead and did the lease for you, because sometimes if the car is a really good option pack, they may want to pay more to get it back early. They'll try to tell you, well, you have to get another car, which is not true, but they may want to buy it out early because they may have clients for that today, and it may not be as popular in a year. So they might say, hey, you know what, I'll get you out of your lease because maybe you've negotiated a very aggressive lease if you were smart to begin with. So there's many factors, but it really comes down to know your numbers. Any investment or any asset purchase, you should know the dollars in, the dollars out. And that helps you make an educated, non-emotional, and more logical decision. I've always used this example. I kind of leave you with this because I don't want to babble on too long. But if you think of you buying a car, look at it as a marriage. Everybody loves the car when they're buying it. Everybody loves it. Like, they love their car when they buy it. They want it. It's exciting. You want to get into it. You're most willing to give your hard-earned money early because you're like, oh my God, this is beautiful. My old Toyota, this is a BMW. I've never even felt this level of like luxury and blah, blah, blah. Well, if you do that, then you get emotional. So you're willing to overpay, right? The way you got to look at it is you got to think about it like a marriage and a divorce. Everybody loves their significant other when they're getting into a marriage. Nobody hates someone they're marrying. Why would they marry them? So they forget about the prenup. They forget about the protection. They assume they'll never get divorced. But things change, and people have a change of heart. They have different needs, different desires. You get older, you need an SUV versus a sports car. You know, you decide you want a younger girlfriend. Things happen, right? So what you do is at that point when you want to exit the relationship, that's when everything goes upside down, because you go, oh man, this is going to be a painful exit. I'm going to lose a lot of money on this car today, or I'm going to lose a lot of money because I don't have a prenup. Right. Whatever happens, you have to plan for the divorce before the marriage so that you're logically prepared for the financial part of it. Because the emotional part is more likely to work out against you at a time when you want to exit a car versus a time you want to buy a car, because you no longer want that car. Now you're overly emotional about getting rid of it, and you're going to be more open to losing money to get the next car you're excited about. So if you want to make good financial decisions around cars, you have to be non-emotional, and you have to plan out your entry as much as your exit, or your maybe emergency exit. Should you buy a Ferrari and maybe you've always wanted one your whole life, you have to look at the liquidity of the car and ask yourself, if tomorrow, God forbid, something happened and I had to give up this car, what financial position would I put myself in? And if you're doing it correctly, you might realize, like, wait, I would only lose $10,000. Well, $10,000 is subjective to the person spending it. Maybe your dream of owning a Ferrari is a lot closer than you think if it's only $10,000 away. Right. Because you might have already spent $10,000 in kitchen cabinets last week and been like, that's not even going to make me as happy as a Ferrari. Right. So what I'm saying is, if you look at it that way, then you're looking at the true cost of ownership, and you're not scaring yourself away from, oh my God, I'm spending $150,000 on a car. Instead, you think of it as, I'm parking $150,000 in a car and I'm exposed $10,000 in risk. Can I afford a $10,000 risk?
Right.
Probably. You know, if you're an average person making six figures, you can probably afford a $10,000 risk in your life. And perhaps maybe you can't afford to actually not have the Ferrari you've always dreamed of today, especially if it's only a $10,000 risk. And that's how you have to look at the equation, not as an emotional, I want a Ferrari, but rather where is the logical dollar in, dollar out of every equation when it comes to cars.
Right, because a lot of people are just looking at it as, okay, the vehicle costs 70,000, 100,000, 200,000. They're just looking at the price of the vehicle, but they're not thinking about, hey, what is going to be the final sale price later? Because that's really what you're going to end up losing. PJ, question: do you speak about all of this? Because I know this is just a 1 hour class. I know you have an entire coursework on this that you've kind of put together. I know that we added in the link down below on YouTube and on Facebook. But do you go through all of this in detail on how to do this? Because I know that this is just very general, but do you go through the detail on like how to go about doing this in
So
your class?
we teach people in this class everything they need to know, regardless that they're experts in cars or not, about luxury and exotic cars, because they have a unique depreciation model that can be hacked, as I call it, meaning understand where to buy and where to sell. So you beat depreciation and often can either break even or drive for free. Or in some cases, even make money, depending on how good you get at the process. I think that what the core of what we teach is everything from the mindset down to the models you need to look at, down to the option lists you should be looking at, the colors, how to calculate the entry and exits. And then we back it by a community that now has over, I think, 10,000 people that are doing this already. And they're sharing their experiences too. So outside of just having my collective knowledge for the last 20 years doing this, you also have the collective knowledge of other people, just like yourself, literally, that are in that community and talking about their hacks and their experiences with certain cars. And that's the powerful model of basically the collective knowledge of everybody who is an exotic car owner.
Got it. So let's shift over before we kind of wrap up. So I want to finish off talking about this whole idea that people ask, and I get this question all the time as an advisor, on the question about, whether buying a car cash, paying it all outright in full, whether financing it is better, because some people start thinking, oh, if I get myself a 60, 70, $80,000 car, my monthly payment's going to be way too high. And that's kind of why people are very much attracted to this whole leasing idea, because they focus on the monthly payment, but they're really ignoring, obviously, the depreciation and the total loss on it. So my question is, can you kind of walk through people on the whole concept behind financing and whether buying a car cash or financing is better, and what your opinion is on that, and kind of how to view monthly payment?
I mean, we're in an interesting economic cycle too, right? With everything happening with COVID and everything else, cash is going to be very king in the next few months, in the next few years, and lending has pulled back a lot across, many banks, where they're becoming more rigorous about giving less loan to value, and also looking at, more deeply into tax returns and things like that to ensure income is not just stated. But so I think cash in this environment is going to be king. In a normal time, I would say that cash comes down to the cost of the cash, right? Meaning, if you're a person that's got $5 million in your bank account and it's just sitting there and it's not earning anything, should you buy the car cash? Probably, because you're not going to earn anything else off of your money. But depending on the profession you're in or the usage of cash, maybe you trade stocks, or maybe you're into watches like I am, and watches in themselves are a luxury asset class to invest in. If you think about that, if I'll give you an average, looking at my own kind of play of my money, watches make me anywhere from 10 to 30% every 2-3 days in return. That's unmatched in any type of lending. No one's going to charge me 30% a month to give me a loan on a car. The average car loan currently is 3.99% over 72 months. Now, if I can borrow $1 million at 3.99 and actually make on that same $1 million that I'm not putting into cars, let's even say 30% a month, or even on a more conservative basis, 5% a month on a regular investment basis, 10% if you're aggressive, it's still significantly better than paying my own money into, putting it in a car. Now, there are levels to this. Of course, if you're worth $100, $200 million and you're sitting on a lot of cash and you can do both, at some point you go, well, why would I want to pay any interest? Because it's not like I'm limited on where I can invest anyway. So it's all subjective to your personal financial position. But I would always say there are two benefits to financing a car that a lot of people don't know about. And I think maybe I'll share these because it's more of a trade secret. The first one is that if there is an issue with insurance, for example, right, such as you get a total loss, the bank is more likely going to protect its interest to ensuring the insurance company pays up in the highest form when totaling your car. that's a big deal, because if not, the insurance company will fight you to try to give you the lease because they know you paid cash and have no liens on the car. So that helps that. The other part that financing helps is the title fraud issues, meaning if a dealer is attempting to pull a scam with a title, that will also go through the bank, meaning the bank will do the title work, not the person. So often the bank will stop the transaction if there's something wrong with the title. Now, that's also a safeguard for people that are maybe not used to buying 200-300K cars, especially if they're not using a franchise dealer and a smaller dealership, which there's nothing wrong with that. But if you're using a boutique dealer and you don't know their intention or are not experienced in this, these are some of the maybe additional undisclosed benefits that come from letting the bank be the money, because then the bank is basically the responsibility of securing the money. And that becomes very useful for newbies. Now, if you're an expert, you've been in this business like me for a long time, you already know what to do to basically protect yourself anyway. So it's no longer an issue in that way.
All right, man. Well, so I think you guys got the whole gist of everything. If you guys are interested in contacting PJ or subscribing to his coursework, I actually went through it myself. Ended up hiring him afterwards to help me find my car. You can go ahead and just click on the link below. I think this is on YouTube and on Facebook. We've added his link in there. It's Exotic Car Hacks. This is not only to buy exotics, so don't think that, you know, if you're not interested in a Ferrari or a Lamborghini, like PJ is, you can still do the same exact concept with $40,000-$50,000 cars. This is not something that only works for, you know, for rich people's vehicles. This is a strategy that works across the board, no matter whether you're buying $30,000, $40,000, $50,000 cars or $400,000 cars. So you can click on the link below as well. We've actually created a PDF version of pretty much the pros and cons of leasing and buying a car. So I'm going to actually share that with you guys so you guys can kind of have that. It's a small little PDF that we actually created just to be able to help all you guys. So if you want to have access to this this basic PDF, you can actually text the letters GFG to 484848. We actually created a small little spreadsheet. That way you can organize, you know, whether buying a car, whether leasing a car, and the pros and cons of each and every one. So every single week we want to offer you guys something for free. That way you guys can just grab more knowledge, grab more information, and just make better decisions. So just text the letters GFG to 484848. We actually created an entire chart on the pros and cons of buying a new car versus buying a used car versus leasing versus financing. So it's an entire chart on the pros and cons of each. So if you want to get access to this, just text the letters GFG to 484848, and we will be sending you this tomorrow by email directly to your email. And somebody from our team will also be contacting you just in case you want to have access to this through text message. So again, you can grab your phone. When you grab your phone, you just grab regular the way you normally do. Instead of texting a phone number, you're going to text 484848, and you're going to just type in the letters GFG on your phone and just click send. And then tomorrow we'll be sending you over that that document, that PDF for you guys tomorrow. So PJ, before we head out and finish off, we do have a couple questions that I do want to ask you. Do you mind if I ask you? I think we got like 5 or 10 minutes.
Please, go ahead.
All right. So let me see here. All right. So the first question is, does the same concept apply to 18-wheelers?
So no, it doesn't. And actually, to be fair, this concept only applies for the majority of luxury and exotic cars. It does not appeal to the average luxury Nissan Maxima, you know, but it would work on a BMW 7 Series or a BMW M5 or M6.
Okay, awesome. So I got another question here from Dwayne. He's asking, he's retiring at the end of the year and still have 4 years on a purchase. Would it be better to buy out the negative and move to a lease, or just pay it off when I retire?
Neither. So that's when, again, you're a consumer of the business, you're a consumer of the kind of the car. The best thing to do is to know the numbers. If you're basically going to be in a good position of an exit right now, maybe you have a negative of $5,000 and you don't want the car, you don't like the car. Well, the longer you stay, the longer you use the car, the bigger that gap gets. So if there's an exit potential, now if you're upside down $30,000 to $20,000, you may not want to waste that money. But the question is, will the money ever come back? If you pay it off, are you not just buying that out anyways? So anytime someone asks me, should I lease? I said no. I don't care what cost basis you get from your offset of business. There is nothing that will overtake the depreciation loss you're taking on the lease.
Agreed, man.
No matter what it is. I don't care if it's Ferrari, it's a Lexus, it's a, you know, Toyota. The only time I tell people it's okay to lease is you can't beat the lease on a Volkswagen Jetta. Like if you want a car to get from A to B and you want to spend $199 or less, like go for it. Like that, you can't beat that. Like that's it.
PJ, thank you, man. I really appreciate it. I know your time is really, really valuable. I hope you guys got a lot of value about this. We're also going to be sending this out. Oh, I forgot to ask, if you really like this class, please do me a favor and grab this video and please share it on Facebook. If you're watching this on Facebook Live or you're watching this on YouTube, just go ahead and just share this with your friends and family. We just always like to get this message across to as many friends and family of yours. I know a lot of you guys that are watching this are existing clients of our office. And a lot of you have been asking, you know, how can I get my friends and family to watch this? Well, this is a perfect opportunity. Just grab the little link down at the bottom, just share it. This is something that we just ask of every one of our clients. If you're not a client of ours, that's okay. You don't need to share that. But if you are a client, please, I do ask for that one favor. Just share this out. We want to get this message out to as many people in our community on the importance of financial planning and investment management. So thank you very much, PJ. I really appreciate it. If you want to get access to PJ's information on how to go about buying cars in the most efficient way, down on the link below, there's you can go to his website called exoticcarhacks.com, I think. And you can go ahead and subscribe for his coursework. If you want our free PDF version that we created for you guys, you can just text the letters GFG to the number 484848, and we will be sending you a PDF version on the pros and cons of leasing, buying, whether new, whether used, and all these different things. So PJ, man, I appreciate it so much for spending time with us. I hope a lot of you guys that are watching got a lot of value out of this. And I know that I think PJ, I think you might have beat me with the talking, because I know I talk a lot, but I think you're right up there with me. So
I'm glad it was valuable, and best of luck to all of you guys watching with your cars.
Thank you, man. Appreciate it. Have a wonderful night, guys.